So CFD and brokerage platforms' growth is inextricably related to their ability to attract, convert, and retain investors. And a key priority for investors, obviously, is seamless deposits and withdrawals that are being done quickly and cheaply. At Zero Hash, we believe that fiat, crypto, and stablecoins cannot individually solve all of the world's transaction needs. The future of unlocking access to a truly global market is connecting fiat, crypto, and stables seamlessly. In today's panel, we will explore how stablecoins represent an opportunity to expand and grow your customer base. So joining me on the panel is Kalyan Yanchev, Head of Payments of Trading 2&2, Guy Crescenti, CTO at Praxis, Nir Bitton, VP Business Development at BridgerPay, and last but not least, Lawrence Willows, Head of Business Development of Digital Assets at IG Group. Gentlemen, I would like to start off with a big picture view and a general question. So what's your North Star metric when it comes to payments? Or in other words, what's your mission at your specific company with payments? Who wants to start? Guy, please, Kalyan, please.
So for us, we have been always focused on the user experience. It's very important. This is the essence of our trading platform. And of course, for payments, our North Star is how efficient we are in allowing our consumers to deposit and withdraw. And of course, the more efficient we are, the more trading activity will drive better customer satisfaction and ultimately more revenue, because this is the bottom line for every business in the end of the day.
Yeah, and I would say, I mean, we should all be pretty much aligned in terms of what the answer would be to this question. But I mean, best-in-class experience is what we're looking for. Region agnostic as well. Obviously, in some regions, it's far easier to deposit into a brokerage account, just given the banking rails in some jurisdictions. But it's just important to, I guess, have that best-in-class experience, which is around efficiency and speed to deposit and withdrawal.
Yeah, so it's all about getting the payment done at the end. So you having all the option you need, in the payment facilitation department, making sure your approval rate is skyrocketing, making sure you have solution all around the globe, making sure you have more than one in every region, making sure that the PSPs are stable, the protocols are okay, and get the job done. Okay.
I think it's from two sides. From the client side, as Gideon said, to give them the 100% flexibility that they're looking to pay, and from the merchant side, also give him the option to offer his client 100% coverage on their preferred payment method, while minimizing the risk that involved.
Brilliant. Glad that you guys on general level are aligned. That's, I guess, what we're all here for. Now, I'd like to jump a bit into the industry challenges. So some of the interesting things that we have been seeing lately in the market. So overnight trading volumes, for example, at Interactive Brokers rose nearly 450%, all thanks to 24/7 trading. We also see that growing revenue. So, for example, Trade Nation has added APMs, including stablecoins, and managed to grow their average deposit size by more than 260%. On the same side, we see that funding brokerage accounts still sometimes takes internationally more than 3 days and around 10% of the transaction fee based on the average deposit size. Another important thing is changing consumer preferences. Consumers right now demand 24/7 funding, and challenge are still remaining when it comes to doing instant deposits. And we will probably briefly talk about Calcium, one of the use cases that we have been powering a bit later. So that being said, Kalyan, I would like to start off with you. What are the biggest payment challenges brokerages face today when trying to scale globally?
Yeah, scaling globally, of course, is always an issue. As you mentioned, sometimes the payment rails are a little bit outdated. There are issues with the APIs and legacy systems, which always cause problems from reconciliation to actual delivery of the payments to end consumers, because it's not only the actual payment, but the allocation and, of course, the compliance side of things. 24/7 trading or 24/5 when it comes to equities is these days the norm, and people will around this, but people are used to having this instantaneous experience. So from their daily life, from peer-to-peer transfers and things like this, they want to see this everywhere. Basically, they don't want to wait, and they want to have liquidity. And for brokerage companies, especially the bigger ones, it's not only the actual payments, but also the treasury operations, because you need to make sure that your working capital and your liquidity is good enough to satisfy the needs of not only the consumers, but the regulator. So it's not only the consumer that needs instantaneous settlements, but also the brokerage companies. Having access to your money, having this access all the time, and in a manner that you can distribute between different banks, distribute between different partners, and potentially exchanges is crucial these days.
And what about any particular painful regions when it comes to customer acquisition and retention?
Yeah, when it comes to trading 2 on 2, we are more focused on traditional markets. We are number 1 in UK, and we have Europe and now Australia as well. For example, UK has been very advanced when it comes to payment rails, like we have the UK faster payments, open banking. But let's say Europe is struggling, especially with open banking. So in Europe, it's a little bit different. So there, even the market is the same. The countries are a little bit different. Some still face legacy issues. Some don't have access to open banking and instant payments. Euro is not everywhere in Europe, so meaning some withdrawals will not be executed. For example, you can faster SEPA instant payments. So even when you're more focused on these regions, you face issues with not the best experience that you want to deliver because you don't have the right rails to access.
And I would definitely echo that from a UK perspective. Faster payments, obviously seamless, quick for UK-based clients. But when we have operations in emerging markets, LATAM, they're the regions where you see the greatest friction, but also the largest adoption of stablecoins. So it's sort of running in parallel, right? So it can take, as you were saying earlier, anything from a day through to a few days to be able to deposit an account, which is tremendous friction when you're running a trading business. That and the fact that there are so many intermediaries involved in getting those funds across. So I'm looking forward to diving into sort of the stablecoin use case.
And on the challenge side, anything that you face in terms of regions or specific geos?
So regions would be the LATAM. So the LATAM regions, the emerging markets regions. And I guess if you just sort of taking a step back as to what we're offering at the moment. So over at tastytrade, our US business, which are partnered with Zero Hash, we have enabled deposits now of cryptocurrencies. So of the 6 or 7 tokens that we offer, we have deposit and withdrawals as a funding mechanism as such, but also a way for clients to be able to custody their crypto. That is an interesting proposition in itself, in that some customers are moving their crypto in to then trade other assets, to liquidate, trade other assets, and then take their crypto back out. But that's a area that we're seeing most growth quite often in the LATAM region, just given the friction, I guess, from depositing from a say pesos into a US dollar brokerage account.
I want to jump in regarding the maturity of the rails, specifically on instant payment and generally RTGS system, real-time gross settlement systems. And again, like I said before, because of the maturity level that you have between countries, for example, the UK versus Europe, SEPA instance, fast payment and so forth, you have to need the ability to change rails throughout the deposit flow. So SEPA instant goes through, offer another APM, go to card, jump from card to SEPA instant, okay, and so on. That ability actually is created to compensate the maturity based on region, generally for cross-border payment across the region. So that is something that you need to have under your belt.
Often we see that businesses want to expand globally, facing, there's hundreds of alternative payment methods and different credit card facilitator out there. So the main thing is basically to give them the opportunity to connect to all of them and to have great coverage, as said here. In LATAM, in Africa, Southeast Asia, we do see a lot of adoption of alternative payment methods, and as well, of course, stablecoins are being big demand in those markets in order to give emerging markets the ability to pay in their convenient way in a shortened time settlement for the merchant.
Brilliant, thank you guys. Kellen, you briefly touched upon that, but I want to dive just a bit deeper. How are customer expectations around payments changing, and what role does 24/7 account funding play in meeting these demands, especially for trading 2 and 2? What you have noticed?
Yeah, we have noticed that, of course, this means that people want to trade around the clock, and this means that they want to seize certain opportunities. and overnight trading, pre-market pricing and stuff like this. And this means that not sometimes, but many times they see something, so they want to make sure that they can trade. And in order to trade, they need money. So payments is always the entry point for us. So we need to make sure that this experience is as seamless as possible. People these days, they expect frictionless experience. I mean, to the ultimate point of frictionless. If they see something that they don't like, they will drop. As it was mentioned, this means that you need to be prepared even before the decline, like to orchestrate and move to another payment method like the soft decline sticks. But the bottom line of this is that people's expectations are high and are right now at this point. They can trade all the time. They want to fund their accounts. They want to be prepared. They want to open orders even before the market is there. They want to be ready. They want to have like sophisticated experience. And sophisticated experience when it comes to payments is I have my money right now on time and everything is correct with my deposit.
I think it's kind of the new generation. Everything has to be instant right now. You don't have any delays. You want to pay right now. You want to see the deposit in the account right now. You don't want to have T+2 settlement time period, T+7 or anything like that. Everything must be instant.
And I would say, dependent on region as well, is that expectation is changing. So in the UK, I guess it's been a couple of decades where you can deposit account very quickly. In LATAM, emerging markets, they haven't had that experience to a large extent. But now with stablecoins, they're like, okay, I can use stablecoins as a form of payment and it happens instantly. Why can I not fund my trading account instantly when I can do everything else instantly while leveraging stablecoins? And suddenly there's like this expectation that's becoming on par, I guess, across regions.
Yeah. And then there's, when you come to instant payment, one of the big challenges around that is that, contrast to cards, where you have what we call purchasing agreement, so you can have chargebacks founded and into the law. You don't have that in instant payment. There is no purchasing agreement, and this is the great challenge. You have it instant, but then something goes wrong, and what do you do? How do you get the money back? There's no facilitation right now around that topic globally. By the way, we're starting to see things in that area in Europe. Okay. And that is a big thing, because again, whatever is instant is instant. It's gone. It went in that regard. So it's a big challenge, and the regulator are working on that, and we'll see what goes on. PSD3 will address it a bit, but we'll see.
So that said, Guy, I want to stay with you and want to ask you, how are payment orchestrators solving some of these problems for brokerages, and what are the challenges of managing complex payment systems, especially touching faster payments, instant payments?
Okay, so like I said before, first of all, we need to have the options to work around multiple rails, and that is, and then different rails have different risk management, scoring and so on. So to navigate between those areas, and then you need to specifically in the crypto world, and the wire transfer, instant or not. Okay, you need to address the fact that whatever comes in is not necessarily what you expected, because at the end, the client can deposit whatever he wants. Sometimes the amount is above what was required, sometimes it's less. You need to have the ecosystem to deal with that, and that is not an easy thing. So it comes from building a deposit flow, notification, what is actually a deal around that, high, low, and so on. And to make sure that the CRMs know exactly what is to be expected in terms of risk management around that topics. And when it comes to fund moving and so on, so yeah, cross-border payments, stablecoins, it's designed to solve that primarily. And the challenge around that is the various regulation that comes around different regions. So whatever you can do while you do it, so you're going to do it when you move funds. So the on-ramp, off-ramp, thing is getting the momentum that it should, and the regulation is trying to attach that. AFT, account funding transfer activities around that areas. Again, and we've seen it starting from cards, but it's going to propelled into the instant payment world, has to be dealt, and the mechanic and the pipeline for that needs to be, from risk management point of view, okay, across the transaction flow.
Near anything, Jed?
Yeah. So on top of giving the merchants, in order to get globalized, the opportunity to work with whomever local acquirer they want, also in the local currency and the local language. Basically, we give them the ability in every place that they want to work and to offer their local services, also to offer what's the most modern payment method, and also stablecoins, of course, and fiat crypto in order to pay instant and fast as they want. And of course, also to maintain, so different markets involve different risk and different regulations. So of course, to maintain the risk minimized by different regions to insert the business logic into the round in order to maintain everything under the same umbrella.
Yeah, brilliant. And I'm really glad that you guys already touched some of the opportunities, when it comes to stablecoins. And I think it's important to stress that this is not, our echo chamber where we sit, everybody, who likes or who uses stablecoins. It's already happening, and we see a very clear trends in the market. So some fascinating stats that I recently discovered. So, for example, Visa processed 12.3 trillion in total payments volume last year. Meanwhile, Stables did nearly 28 trillion. It's unadjusted, but still a fascinating increase in numbers, surpassing Visa by more than 100%. Then there's Kalshi, a customer with whom we launched during the elections. So they did 25 million in USDC deposits just in 7 days. That's a pretty fascinating number. And overall, we see the crypto momentum moving, and it's moving very strongly. So there's over 600 million crypto wallets out there. People ready to deploy and fund the capital or the currency or the means of payments that they're used to. 24/7, 365 account funding. This is the key caveat that's powering this trend. And of course, no chargebacks, which obviously has probably their own challenges, but that's a powerful tool for probably everyone who's working in online and accepting payments online. That being said, Kelly, I would like to start off with you here. What are the biggest opportunities you see from offering stablecoins to fund a trading account and solving the payment frictions that we have with traditional means of payments?
Yeah, just before the event, we had a very nice discussion, and we see that potential opportunity is around treasury operations, especially because currently, as you mentioned, with the normal payment rails, and there are different limitations. And we have, for example, been thinking about an internal project, how to optimize and move funds more efficiently between our banks and make sure that we have the adequate liquidity where we need it and it's fast. And for example, to UK faster payments, there is a limit, like 1 million that you can do with one transfer. With stablecoins, you can overcome this and you can be faster, you can have richer data, you can automate a lot of process. And when it comes to payments and opportunities, of course, when you have been talking about, deliver the best consumer experience, instant payments, this means that there is a lot of backwork and reconciliation and things like this are even sometimes more important than the actual payment that is coming, because to stay in business, to sustain regulatory, to be regulatory stable, you need to make sure that you follow the rules, you account for everything. So with stablecoins, with your APIs, with faster, with richer data, it means that all this process can be optimized, automated, and you can deliver improved experience internally, not only externally, because in the end of the day, to deliver the best external UX, you need to be sound and safe internally with all the process. So I see that treasury operations potentially, and also automations and scalability internally for the organizations with richer data, better APIs, and of course the entire infrastructure to be delivered to the next level with stablecoins potentially.
Lawrence, what opportunities do you see?
So, I mean, somebody might fact check me here, but this morning it was $200 billion, the market cap across USDC and USDT, the two largest stablecoins in the world. That is a lot of capital that's sitting there waiting to be deployed, possibly into crypto or possibly into other assets, right? So, I mean, you start where the money is to a large extent in a lot of businesses. So that for me is obviously one of the most important pieces. In terms of opportunities that we see at IG, Tastytrade, etc., is we are product agnostic. So regardless of whether you want to fund your account via stablecoin, if you want to move your crypto to a self-custody wallet through Tasty Crypto, we give that opportunity if people want to stay on chain. But I think it also comes back to the fact of what is that particular client looking to do with their crypto or with their stablecoin. So I keep referring back to LATAM emerging markets. Their use case for a stablecoin is very different likely to the use case of a stablecoin for somebody residing in the US or the UK, where perhaps the reason they're using stablecoin is because they're avidly trading crypto and they don't want to move off chain. So they go, right, okay, I can fund my account with stablecoin, stay in digital assets as such, and trade other assets possibly against that stablecoin position. Or in LATAM, for example, where it might be actually my stablecoin holding is a hedge against inflation, and here is an opportunity for me to fund my account via stablecoin because that's what I prefer to sit in as opposed to my local currency. So I think there's a whole host of opportunities that you can sort of run through, but talking from a product experience perspective, it's very much, look, we're product agnostic. If you want to use your stablecoin to trade more crypto, sure, go ahead, do that. If you want to use your stablecoin to fund your account and participate in other assets in a more traditional sense, absolutely. But I think that's the important piece, and I think how you'll see the emergence of stablecoins, digital assets coming closer to traditional finance and traditional funding rails, I guess, as well.
So, fee limits and reconciliation. That would be, the magic stick around that topic. So, I mean, you were talking about limits, 1 million and so on. So, again, deposit comes in. You need to choose the right payment method for that specific. So it goes to the limit. So what amount, minimum, maximum, okay? How much fees you are paying for that transaction, okay? You want to have the minimum when you send that, and you want to make sure that the money is your account. So reconciliation is very important, and when you have that, you have to orchestrate that in the right sequence, in the right logic, and to give that opportunity both to the operator and to the client. And then you make sure you manage the volatile currencies, the conversion between, because for example, you have a trading account in X currency, you have processing currency that is in Y currency, okay, but that one of them is more volatile than the other. You have to manage that. You have to put the right spread, the option to do it on the platform while you're doing that. Okay, so that is something that you have to do while you are capturing those opportunities across.
I think that, we discussed about volatility and risk involved. I think, that stablecoin give the option to all those merchants who stand aside and don't want to get involved in traditional cryptocurrencies such as Bitcoin because of the volatile and the fees to exchange. So I think stablecoin give 100% of them the opportunity to step in and basically to limit the volatility that they're afraid of and to accept it from the clients.
Brilliant. So this is exactly what we see, at Zero Hash, and kind of one of the reasons why we exist, because we are trying, to solve the industry challenges, unlock the opportunities, and providing the right solutions with our stablecoin funding products, which we will later showcase. Global licensing, compliance, accepting stables, receiving fiat, so very operationally lightweight. No need to worry about having crypto on your balance sheet. Everything's done very, very seamlessly. Multi-blockchain stables, and you are able to own your front-end UX. So that's where we see the industry going. These are the use cases that we're already powering now, and given what folks from the industry are seeing, we are thinking this is going to be a very big and promising, next step or next transition. That being said, Lawrence, I want to ask you, what infrastructure considerations should brokerages evaluate when implementing, stablecoin payments? What matters?
I think two main areas come to mind that I think is worth raising, and that's user experience as one part, but also the regulatory side of things. I'll start with the UX. So if I take a jump into the deep end of digital assets as such, to possibly some of those of you in the room where you're using self-custody wallet applications, there are dozens and dozens of blockchains to which the same token can run on any of these blockchains. And one of the main things that we're looking to try and do with the self-custody wallet, and as you're seeing other self-custody wallet providers do, is trying to abstract away that blockchain from the equation. What I mean by that is, say a user comes to our platform or to a brokerage platform and looks to deposit their stablecoin, they shouldn't have to worry whether their USDC is currently on Solana, Ethereum, Arbitrum, Optimism, all of these EVM chains, they should be able to just deposit directly into their account and not have to worry about that complexity. Because we're still in the era of, I guess, even having this conversation around the different layers of blockchains that are involved, whereas somebody has a stablecoin, they want to deposit into their account, they shouldn't have to think about those different layers that sit on top of it. Jumping across to the compliance and regulatory side of things, so not only have you got the fact that obviously firms and brokerage firms are going for license applications, have licenses with various regulators around the world, to which there is still not regulatory harmony across the world, particularly in, say, the US versus Europe versus the UK, etc. But now you have another dimension, which is stablecoins being approved in particular regions. So you've seen USDT, Tether, the largest stablecoin, makes up around 60% of the global supply of stablecoins, now stripped away from a lot of firms that are operating in Europe. So that suddenly is like, does that mean Tether's going to be in trouble? And then you go, no, a lot of Tether's flows in Asia is in areas outside of Europe. But it's this a different layer now that has to be thought about as to, can we accept the largest stablecoin into our platform compared to before, where you could really accept any. So I guess it's just this continuous evolving landscape around regulation, which starts with stablecoins, fortunately or unfortunately, in particular regions. So I think that there's sort of two of the main things to think about.
Yeah, very good points. And to just continue maybe on what Lauren just said, Nir, what are the main concerns brokerages have about implementing stablecoin payments and how these could be addressed?
So it's another payment that they want to offer. I think one of the main risks that I heard is kind of the bankrupt risk of the company holding it behind. I think this is one of the main things that would put me away from it, if anything. But as long as this is not a risk, they're pretty open to start using it.
Guy, what do you see?
Well, I think it boils down to who holds the infrastructure when it comes to risks. Because like you said, I mean, you need to manage, you need to see to understand how the flow goes and what the client sees and what network comes and so on. So the question is, are you going to use, for example, an exchange who holds that for you? Or you're going to say, look, I'm going to do a Fireblock, I'm going to buy something for myself, I'm going to do it myself, I'm going to sit on the blockchain and I'm going to manage the entire thing. Can be done. It holds a lot of money, entail, a lot of resources, a lot of risk on your side. And I've seen that debate go across the brokerage industry right now. What are we going to do? I mean, we're going to save the fees, whatever is going to run there. We're going to buy it. We're going to do it on our own. And it's a thing. And of course, there's pros and cons in between. Fees is doing it yourself. You think, but when it comes to operating accounts, hot wallet, cold wallets, where the money is, liquidity provider integrations that falls around that topic around. Again, it's really a challenge, and it's all around how big you are, who you are, in terms of technology, risk management, treasury, on that area. I think that is a big challenge right now. We see in the market, that limbo. What we're going to do? Where's the infrastructure sits right now?
100%.
And I was just going to say on the challenge front, the education is definitely, still paramount to a large extent. When you first open some of the blockchain analytics tools, it's sort of overwhelming the amount of data that you receive. So it's about upskilling, I think, internally, so that everybody is on the same page and is comfortable in giving that offering, because it's not as scary as it seems or is plastered over the news at times. And actually, there are guardrails that you can put in place, which obviously Zero Hash, I'm sure you'll talk through in the product demo later. But you can do additional layers of KYC if you already have a client, so then before they deposit into their account via stablecoin. So I think they're two of the main points.
100%. Yeah, very interesting insights, and I guess we could continue talking for another hour, but it's time to wrap up. And for wrapping up, I would like for us to think about the future. What's ahead. Let's start off with the brokerages, maybe Lawrence, with you. So looking ahead for the 3-5 years in, how do you see stablecoins transforming the brokerage industry? And what new opportunities will create, if any?
So keeping assets on chain, I think, is going to definitely be a thing. You obviously are seeing a massive domination of US dollar denominated stablecoin. The euro stablecoin, the British pound stablecoin has not kicked off. There's just not, the liquidity in the market to be providing or give a good use case for those stablecoins. I think there's going to be a big transition into the buzzword of real world assets coming on chain. You're seeing money market funds become tokenized. You're going to be seeing bonds tokenized. You'll see gilts tokenized. You'll see equities tokenized probably 3 to 5 years in some regions. But what are they going to want to move in and out of? Is it going to be from fiat currency, from your pound, euro, dollar to the tokenized equity, or is it going to be from stablecoin to equity? So it's a shift in landscape that we're in that's ever moving. But it's going to be very interesting 3 to 5 years. Let's put it that way.
Yeah, 100%. We're already seeing that, with some of the customers that we are powering, like BlackRock or Franklin Templeton, and inevitably, probably every asset manager will move into that direction. But getting back to the brokerage, Kellyan, what do you see?
Yeah, I completely agree with you. I think the good product is a simple product, is the effortless product, and good operations are the scalable operations. And this is where I see stablecoins helping companies, brokerages, to be able to scale, to offer better products that are easier for consumers to use, more simpler, and eliminating the need of so many rails, and also potentially allowing brokerages to scale globally in an easier manner, because in the end of the day, payments is the first thing that you need to deliver to your consumers if you want to enter a market. For example, LATAM, we see that this is a market that requires the need of stablecoins, that is delivering currently bad experience, not only from consumers' perspective, but companies not able to move funds, take out funds, and the liquidity is really bad. So stablecoins potentially can fix all these things.
Brilliant. Now let's jump into payment orchestrators. Nir, what would you see in the next 3-5 years?
So I think that we continue seeing what we already seeing, the increasement of demand of brokers and crypto exchange to use more and more stablecoins. However, I think we do see a lot of other industries asking for using stablecoin as well, along with traveling, e-commerce, for example. So I think the trend will just simply keep going. And we're already seeing also physical stores with a terminal machine using stablecoins in order to offer their clients to pay here in Cyprus, by the way. So I think the trend will just get bigger and bigger in the next 3 to 5 years.
Give us a cherry on.
Well, I think the future is here. I think it's not about, it's here.
In this room.
Yeah, it's in this room, and merchant are using stablecoin. Stablecoin is going to increase the demand for that, and now I think in this time more than ever, even in the future, because of the regulation and clarity. So it's a good, solid way to move fund, reducing the volatility and the risk of using any kind of other crypto asset. So stablecoin is the right move, and we're seeing that. So you have to put it in the blend and the mainstream in your currency portfolio when it comes to technology, when it comes to currency exchange, when it comes to feature around those areas, offering those in multiple domains and so forth. Of course, what we'll see in the future, more coming into stablecoins as to other crypto assets, but also stablecoin, because of the similarity and the tether to the standard currency is more a bit of more KYC that we'll have to blend in the technology itself. So we'll have to do KYC in a better way, maybe less loosen up, maybe depends where. LATAM less, and then from the next year Europe is there. Depends east or west, depends where you are. So you have to blend that in, and you have to navigate in that mist between exchanges, stablecoins providers, other currencies, and the region you are in. Okay, so you can actually execute that transaction in a good way. That technology has to be there, and it's there, by the way, to the extent. But we see more and more, and again, the regulation is a big factor here. It will always be, and it's like a cloud above us. Where we're going to go, left, right. How it's going to behave. Okay, what region? Let's see what's going to tackle us tomorrow morning. So yeah, and you have to jump and adapt. So yeah, that's how it goes.
Brilliant. Couldn't have said better myself. So let's give a round of applause for these great panelists.